Hey, it's Mike with PriceActionTradingSystem.com, and it is Thursday. It's August 3rd. This will be our chart lesson for the day, and this is going to wrap our week up. Week seems like it went by pretty quick. Another range day really today, um, but no chart lessons on Friday, so we'll wrap it up for the week and be back to do it again Monday. But it won't take long to go through the day's chart lesson, so I'm not going to beat around the bush. On a range day, just remember the way you trade this is you have to go short off the highs and long off the lows. So that's really the only way to enter. And where it gets kind of dicey is in the middle. Um, you got to be really careful. So, but what prices do is they just go from the highs to the lows, the highs to the lows, the highs to the lows. And there is somewhat of a channel here. You don't really need it, and it doesn't really help you today for that, in that sense. But if you started up here, it doesn't matter what you try to grab, you never grab the one you want. But if you start up here and go off those first two swings, you can see these trades. And really, if you're trading this as a channel like this, you might have got tripped up here because that looks like a really good entry there channel wise. But if you're looking at the shorter term little range, that's probably going to help keep you out of that, keep you on the right side. But you can see there's a channel there for sure that's working down. But when you're above the EMA, below, above, below, above, below, above, that's a range day. And you can see that consistently what happens every time you come down here. Even if it breaks through, it fails and reverses. And every time it comes up to the highs, what does it happen? It turns down. But here's the only clue that we may eventually go lower here is that notice these highs, we were consistent here and then we're getting lower again. And we're consistent here and then suddenly we start pushing lower. That's because we started making lower highs here. And it's because there is somewhat of a channel here. But you really are going to be better off playing this as a range. And what you want to do is go short off the highs and long off the lows. And just if you'd have bought any one of these lows, once it made a low and reversed, you'd have made money. And if you just sold any of these highs, you'd have made money. And so that's the key is to, on these kind of days, and it's in the middle where you can get kind of dicey because you came off the lows here, you would think you were going back to the highs, but what happens? It turns back down real quick and breaks out the bottom. And I like to buy these kind of setups here. That's a very bullish bar after a failed break lower. A lot of times you'll catch a major low. It didn't turn out to be that way here, but if you'd have caught this one, that turns out to be a major low, and it rides all the way back to the top again. And where does it find resistance? At that very same highs right there. And if it went on through, you'd have looked for it to maybe turn down off these highs. So just keep that in mind. That's the key to trading ranges. Just be careful in the middle. But when I came in, we were working up. Here's your reversal pattern. Notice that new low. You got a trend line working up. You get your first break. You get a first entry short, second entry short. That's a reversal pattern. We do have a break and a new high, but you don't know that you don't have another trend line going up here. And so with that failing right there, I'm going to take that long every time because a lot of times when you get a break, you're going to get two legs up to a new high. And so you want to make sure that prices have reversed. And if you look at that, it's basically almost a measured move. We actually pushed a little bit higher above what had already been the overnight high there. And of course it fails because it's a range day. But then you get your reversal pattern coming down. This one is not ideal. Notice what happens. You come down, you got a leg coming down, you try to go higher, you get a second leg coming down, you try to go higher. So that's two attempts to go higher that fail, and you get that nice bearish bar. Notice how we went through the EMA, came back. I like going short there. And of course you can catch this one and ride it all the way down. You get your true failed second entry long right here, and you get this nice bearish bar again. The key to this, when I drew this arrow here, I marked it red, but the only way you can take this, if you count right here, there's not enough room to get out. It'd be a 4-tick failure. So, but if you let it break lower and you drop a limit order a tick or two back, maybe 3 ticks back, if you can get filled, I'm okay with that. I'm willing to give that a red if you trade it that way. On just a stop, at least on my chart, you wouldn't have time. If I had a sell stop 1 tick below, I'd have, it still, I think it still would have worked because it came up and went lower here, but it's a risky trade. And so the only way to do this is with a limit order. And otherwise, you can't mark that red. So that's why I marked that. And you get a repeat, basically. The same thing happens over here again. So I marked it again, and we'll talk about it again. But notice you got a trend line coming down. You get a break, and you get 2 legs down with that last little push that traps everybody, that pushes lower, and it turns up. I actually marked this one because it's a double bottom, and you've already got 2 attempts to go lower. It was just, and guess what? It's just enough to get your 4 tick scalp, and it turns down again. You don't get a bullish enough bar here. That bar is way too bearish, and this is just an inside bar. If it had been a little bit lower and you could have got in above this inside bar way down here, maybe your stop still would have to go here, but I don't like that one. You need to wait on the reversal. And by the time you get a reversal pattern, look where it's at. It's up here and it's just going sideways, and you don't want to go long into that right there. You just can't do it because what happens, you get trapped. Just like that's what happened to all these people that went long right there got trapped, and it ran right back down to the lows again. They got stopped out. So I marked this one red. Um, it really could be green because that's not a very good signal bar. I like a better signal bar than that. It's just not a very good signal bar, but it's a small bar. It's only about 3 ticks, so it's low risk on that end, and so you might want to risk that one, but this could easily be green. So just remember that. But it's a double test of this level right here. Notice that high, you tested it once, you tested it twice. So looking at it on a little bit larger level, there's some other reasons to like that. This is looking like the high of the range now, and so you just about can go short on any touch of the high of the range or any touch of the low of the range or a failed break. So I like that trade, but it could easily be green. So keep that in mind. And of course, it shoots right through the EMA, pulls back, and gives you a lower high. It actually went higher on a bullish bar and fails and turns. Just go short right there. You're looking for it to come back and test the lows. And it actually breaks the trend line here and gives you that failed second entry long. And but again, you got to have enough room to get out before here, or else this may happen to you, and you would have got stopped out only to see it go down and work or go where you thought it might go in the beginning. So you got to have room, just like I talked about over here. So if you let it break lower and you can drop a limit order far enough back to get in it and get in it where you got enough room to scalp out before that low, then I'm okay with it. Otherwise, you got to skip that trade. So, and I mean, look, you've got evidence of how many times it's bounced down here. And you don't have a good enough bullish bar to go long here, so you can't take that one. And then it runs back down one more time, and it breaks lower, and you figure this is probably going to trap people. And you got a nice bullish bar this time. But generally, you're better off to wait on a higher low, just like I talked about here, even though that one worked. It pushed down one more time because it may push down. So I'm not willing to mark that one blue, really. Um, I'm only going to make it green, but it's real close. I'll be honest with you, I like those trades right there. This one's later in the afternoon. I like them better in the morning. But that was a quick, easy move. And then you just kind of went sideways into the 3 o'clock or the 2 o'clock hour. And notice what happens here. You get a failed break lower. You could have gone long there. You get a failed break higher. You could have gone short there. And both of those would have made money. Just by following the rules. And this would have been a nice move down. And then where's your reversal pattern? There's your low, first entry, second entry. So there's your reversal pattern. If you drew your trend line, it's there. And so there's your reversal pattern. Look, if you'd have went long. Of course, this is after 2 o'clock, so this is all hypothetical. But it would have worked again. Another nice trade. So you just follow the rules. And on range days, you're looking for reasons to get long off the lows and short off the highs. And, I actually had somebody ask me, was this, their setup looked a little better on the second entry here than mine did. But they asked me about a second entry here. Was this really a second entry? Yeah, there's a second entry there, but you don't want to go long into that. You're looking to get short here. Look at this high. You pull back first entry, and then it tries to go lower again. And they actually had a lower high here, and so it was a second entry. This is still considered a second entry, but it's not a very good one. Their chart looked a little different than mine, but I mean, just assuming. But they went long here on a second entry thinking that it was a good entry. And it is a second entry, but this is not a second entry you want to take. Not at all. Because you're getting long right into the highs of what's now the high of the range across here. And you probably would have had this line right here, actually, at that point. I moved it up later. But you would have had it there, and that makes this that little failed break higher. And you go short there. So you don't want to be getting long into that. Hopefully that's clear. And of course their chart looked a little different, but it's not, even on their chart, it was not hard to see all the resistance across there. And hopefully you can see all the resistance across there and would understand why you can't go long there. But yeah, the key is getting long off the lows and short off the highs on a range day. And the key that this is a range day is your EMA is going sideways and prices are constantly above and below it, flipping up and down, up and down. And the other key, the main key early on, is that prices, here's your overnight high and here's your overnight low. By late morning, you're still trading within that, going back and forth above the EMA. That's a range day. That's what you need to keep in mind when you're trying to remember the type of day it is and how you should be trading it. So I'm going to wrap it up. I'm going to start my weekend. I'll probably trade for an hour or so in the morning, and that'll probably be it for me. So hope you had a good week. Hope you have a great weekend. We'll be back again to do it Monday. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.